Thank you. Hi, everyone, and thank you for joining our panel. I'm Hind Shouqe. I'm head of ESG for global credit markets for the West, and I'm also head of financial markets for Middle East, North Africa, and Pakistan. This year, COP is happening in Egypt. This is going to be the first time that a big climate event is happening in a country of the global south. And the government of Egypt has made it clear that it wants it to be the COP for Africa. Africa as a continent is only responsible for 3% of global emissions. However, it is one of the most impacted by climate change. One of the key topics of the discussion at COP is how are we going to channel capital and financing from developed markets into emerging markets for a just and inclusive transition. This is not a small task. We estimate that emerging markets need $94 trillion in investments to reach net zero by 2060. So it's a massive discussion that we have to tackle. Our panel today will examine three things: how some of the countries in Africa have embraced sustainable transition and projects so far this year. Secondly, how investors so far have been investing in and participating in the financing. And finally, what needs to be done to accelerate capital inflows from developed markets into emerging economies. I have the pleasure of receiving some very distinguished panelists today. They're all joining virtually, unfortunately. So first of all, Steve Libertov, thank you very much for joining us. You're joining from Chicago, I think, and it's 5 a.m. your time. So thank you very much for this special effort. You are the lead portfolio manager at Nuveen for fixed income, and you are especially leading all the strategies related to ESG. So it's an absolute pleasure to have you. Hi, Steve.
Good morning. Thank you for having me.
Thanks. Abdullah Abiari is Chief Investment Officer at the Sovereign Fund of Egypt. Abdullah, you have over 20 years of experience in private equity, and you joined the Sovereign Wealth Fund, which has been established relatively recently to activate the private sector in Egypt. Hi, Abdullah. Good
Hello.
to see you again.
Thanks, Hind.
Yeah, thank you. And then Oluranti Doherty, you are the head of climate finance at Afrexim Bank. It is one of the leading multilateral development banks in Africa. Hi, and thank you very much for being here, Ranti.
Hi, it's a pleasure to be with you today. Thank you.
Thank you. And finally, we have Lina Osman. She's the head of sustainable finance for Standard Chartered Bank. And Lina, you're going to be the spokesperson for Standard Chartered today.
Perfect. Pleasure to be here.
So before we begin the usual housekeeping rules that we've had since this morning, this session is going to be recorded. We'll take the audience questions. Please do ask questions. You have iPads in front of you for those who are present physically, and those who are joining virtually. You can put in the questions through the Q&A box on your screen. So let's begin with Abdullah. And Abdullah, Lina and I, we actually just came back from Cairo, and it was fantastic hearing all the projects in the hydrogen space, in renewables, in decarbonization of the oil and gas industry, etc. It was quite a phenomenal ambition from the government, and I feel that it has dramatically changed over the past 2 years. Can you please tell us about some of those projects and give us an overview of what is happening in Egypt in that front?
Absolutely. Absolutely. No, thank you. Thank you, Hind. Thank you for having me, and thank you for visiting us last week. This week, actually, we've been very blessed by fantastic resources, which are wind and solar resources that we really need to capitalize on. So the Sovereign Fund of Egypt, when we started to deliver value out of government unutilized or underutilized assets. The first one that we came across were wind and solar, and how we are not at the epicenter of investments in renewables. We have Africa's largest solar panel, but that's not enough. I think we've stumbled upon a gold mine. How can we make Egypt the center for green hydrogen investments? And I think we are capable and we have all the building blocks to do that. So in the context of COP, and as you correctly mentioned, Egypt is hosting COP27 on behalf of Africa. So we have a very big responsibility of bringing in all the concepts that the African continent can be a leader in. And it is first and foremost investments in new technologies that will get the globe to a net zero position. We are very fortunate and very confident that we can bring together green hydrogen investments that are sort of not theoretical investments. These are very practical investments. And to put, pen to paper and put the conceptual ideas into practice, we are planning on launching and introducing the first green hydrogen project in Egypt live during COP27. So we've signed several agreements, basically with 7 different developers to launch large-scale hydrogen production projects in Egypt. But the first of these, which is 100 megawatts of electrolyzer, will be commissioned when we will host you all and have the pleasure of welcoming you all to Egypt and Sharm el-Sheikh in November. This will be fantastic. This will be a landmark, because when you speak about investment professionals, we want to see projects on the ground. We want to see projects being implemented. It's excellent to talk about ideas, and it's very important to talk about strategies, but it's also very encouraging to talk about something today on the ground you can see, that you can visit, that you can touch. And this is what we want to provide in November.
Fantastic. Thank you very much, Abdullah. That's very, very comprehensive. And certainly Egypt is embracing the transition to green, basically. But Ranti, you cover most of Africa, including Egypt. But actually, we just heard about Egypt. But I wanted to get your take on what is happening in the rest of Africa in this space. Are they also announcing a number of projects? Are they embracing the transition? Or what's the situation over there?
Thank you. Like you rightly said, my bank is a multilateral trade finance bank. We represent over 51 participating African countries, and we are based in Cairo, just like Abdullah, and we are looking forward to the COP27 in November. We have our branches all across the continent, 5 branches from Abidjan to Douala, Cameroon, Harare, Zimbabwe, Kampala, Uganda. And so Abidjan, Cote d'Ivoire, this has allowed us to, really feel the pulse of the continent. Like you rightly said in your presentation, when you opened the session, African countries have realized that though they don't contribute enormously into the, greenhouse emissions, but they bear the brunt of what is happening currently. And this has brought an awareness that we need to have a balanced approach towards, moving, into green financing and to supporting green financing projects. And we've seen a very, very huge upsurge in the number of renewable transactions that have come from our member countries. We've also seen a request from African countries that we need to have a balanced approach towards transitioning. And also we need to consider how to decarbonize the oil and gas industry using natural gases as a transition fuel. And, these are the things coming out of our member countries. Increase in renewable energy, increase in solar projects, geothermal projects, also a request to look at natural gases as transition gas to ensure that Africa can still industrialize while also moving towards a net zero carbon emission. Thank you.
Thank you, Ranti. I think I completely relate. The gas is going to be critical for the transition in Africa. And one of the very good examples is actually Egypt, where you have started being a net exporter of gas, I believe this year or last year. And we cannot consider the energy transition without having gas in your mix. And even in Europe now, they have actually accepted this fact. Sorry, now moving on to Lina. Lina, you've been having a lot of discussions in the African continent on these topics of climate resilience, financing around this, etc., and sustainable finance in general. Can you tell us a little bit about this?
Yeah, so to just take a bit of a step back and give a little bit of a background. So at Standard Chartered, we have made a commitment to get to net zero from our financed emissions by 2050. And last year, we came out with an announcement on interim targets and a methodology that will get us towards the pathway to get to net zero. As part of that, we announced that we will mobilize $300 billion worth of green and transition finance. But at the same time, we also launched a transition finance framework that outlines the projects that we will be supporting clients on in order that we would label as transition, and that will kind of contribute towards certain trajectories that the clients are on for specifically for climate. With that backdrop, most of the discussions that we've been having with clients have kind of been directed by either our strategy or their requirements. So the way that I would categorize it is into two buckets. The first bucket is their sustainable financing needs, and questions around how it works, what it requires, etc. And the second bucket is around what can we do? How can we do more? What are others doing? So if we look at the first bucket to start off with, a lot of the discussions are around kind of how do we embed sustainable finance within our capital structure. And therefore, you kind of need to listen to the clients and understand what they're looking for and what their operations entail. And that has led to us launching 16 new products over the last 12 months that specifically are customized and cater to the requirements that our clients are asking for. In the second bucket, we are looking at how to support these clients from peer benchmarking, gap analysis. There are questions around reporting and disclosure. There are questions around what kind of strategy can a company like us put in place? And that's where our ESG advisory proposition and transition financing come together in a package and provide that thinking or thought leadership to the clients, and then maps out their capital requirements and how they can be financed, what kind of pockets of liquidity are available for that, and so on. Equally, we also support governments and financial institutions. So a very good example of that is a framework that we recently did for the Ministry of Finance in Ghana, which is quite a unique framework, actually, in the way that it caters for Ghana's economic growth in a sustainable way, because it addresses certain projects that they would require from a green and social perspective, but also by embedding an overlay of sustainability linked structure within that. So on the one side, it is going to address requirements for financing of things like renewable energy, energy consumption, clean transportation. And on the social side, it's going to embed things like affordable housing, sustainable infrastructure like healthcare, education, etc. With that in mind, there's also an overlay that embeds KPIs in, and those KPIs allow Ghana to direct their national budget towards things that are aligned with what they're trying to achieve from a social and green perspective.
Sustainable Development Goals, I believe.
Aligned with the SDGs, precisely. And these include things like number of hospital beds per capita, and the number of graduates from senior graduates from high school, and so on. Another really interesting example that I want to highlight is a very innovative structure that was put in place for a green private placement that we placed with a European fund manager, which was for a fund for that European fund manager, which was directed to one of their green funds focused on financial credits in emerging markets. And that was for Axis Bank Nigeria. So we worked on putting together, on updating their framework so that it reflects the latest use of proceeds that they would require. And the reason this was really interesting is because the angle it provided is a cost-efficient structure. So it was a puttable private placement, and it had a step up in terms of the pricing. First 2 years, it was a 5-year structure. The first 2 years provided a pricing that kind of pays in line with the 2-year Nigerian sovereign curve.
Yeah.
And then there was a step up. If the put option was exercised, then the issuer essentially paid the 2-year Nigerian sovereign curve.
So it was a cost-efficient structure from the issuer's perspective.
Exactly.
Given the yields are extremely high, as we saw.
So if the put option was not exercised, depending on the prevailing market rates or yields at that time, then the client ended up paying actually below the 5-year Nigerian sovereign curve. So in that way, you kind of created a structure, a cost-efficient structure that made sense, that catered for financing green projects, etc. So lots of examples that I would love to go on and on about, but I'll stop there.
Okay, no, fantastic. Thank you very much for the comprehensive explanation, Lina. And that gives me a perfect segue into Steve. Steve, you are, I think Nuveen is one of the largest investors in green bonds. You have $1.2 trillion in assets under management as a whole for the company, and you oversee all the strategies that embed ESG within that, and that represents around $18 billion under management for the fixed income side only. I want to, before we get into the products that you've done in emerging markets, etc., it would be great if you could explain what is the approach at Nuveen in terms of ESG. How have you embedded ESG into the strategies? And I know, sorry for boasting about this, but I know you've been at the forefront of setting up some of those strategies with a number of regulators and working groups over the last few years, actually.
Thank you for having me. Yeah, and so the approach that we take, I'm the head of our global fixed income product business that involves integrating ESG and impact into public fixed income portfolios. So we have our approach is dedicated to ESG leadership and impact. And the ESG leadership portion is where we work internally and with third-party data providers to identify issuers that we believe represent ESG leadership. And we work at that approach because we believe and see the data that shows that issuers that are strong on ESG characteristics and criteria tend to be better operated and managed, which means they have a more stable free cash flow profile, which for those of us in fixed income is really critical because it's an asymmetric payoff class. So the more comfort we can have in the stability of cash flow, the greater the likelihood we're repaid. And that's how you generate outperformance in fixed income, isn't picking winners, it's avoiding the losers. So we try to translate our ESG focus into factors that allow for an implication or an effect on free cash flow generation. On the impact side, that's a little bit of a different approach where we are very much focused on the concept of transparency and disclosure. There we are very much a use of proceeds investor from the impact side. So we are very much looking for securities that have a direct and measurable social and or environmental outcome associated with them. And we've been fortunate, we have a long history in this space. And our parent company, TIA, actually had one of the first socially responsible products, as it was called back then, that was started in 1990. And we've been able to develop and grow over time to a place where, as you mentioned, in the funds that I'm managing, we have over $18 billion of assets. They are all actively managed total return vehicles that are benched to common fixed income benchmarks, but where we're utilizing the concept of dedicated ESG and impact. And we've been involved, and I think because of that, we have been fortunate to be involved. I was on the initial executive committee of the Green Bond Principles, so I did help to write them. And we have gotten it through that role. We've been able to work with the European Union a little bit on their taxonomy at the very beginning before they had even kind of flushed it out. And we try to take advantage of our position as a large investor in the space to be active and involved in a lot of new and different inaugural type transactions. And that's what has been so exciting about some of the investments we've made in emerging market countries, especially in Africa. And I think, and I thought, as we were discussing during the prep call, 3 of the most innovative products or innovative securities we've invested in that have extremely high impact have all been based in Africa. The IFC Forest Bond, the Seychelles Blue Bond, and most recently the World Bank Wildlife Conservation Bond. And that has been a really exciting opportunity because we feel like all of those are unique, but they also set up very template-like transactions that we hope are able to translate into other opportunities. And that's not even mentioning some of the other deals we've done. The Egypt Green Bond was a great opportunity for a first sovereign in Africa to issue a green bond, and as well as the Swehan project in the United Arab Emirates, their first utility-scale solar project.
Fantastic, thank you very much. So it's a combination of the ones that you've been involved in emerging markets are a combination of deals that have been issued by top-notch issuers in terms of credit rating, such as the World Bank and IFC.
There has been
sorry.
Oh, I was going to say that in Africa especially has really been a native public-private type partnerships, which I think has really been a strong, position, and really one where the opportunity set should be able to continue to grow based off of that work that's already been done.
Yeah, we're going to speak about it again, but you've also invested directly in some of the bonds. For example, the Egypt green bond. Egypt is one of the countries that have issued a green bond at the earliest, actually, within Africa. So great leadership once again. but you have been involved in both cases. That's what is interesting in the case of Nuveen. Great. So I'm just going to turn back to Abdullah, actually, because we've seen in just the previous panel discussions that we've had, the situation in the capital markets is quite difficult at the moment. The levels of debt are elevated, the yields are extremely high. And when we were in Egypt, one of your ministers explained how Egypt plans to try and move a lot of the projects and associated debt to the private sector. And that will be one of the strategies for them to stop the reliance only on public debt and the burden on public debt. So I wanted to ask you, Abdullah, what will be the role of the Sovereign Wealth Fund in this, and how you're going to take a more active role? Thanks.
Sure. No, thank you. Thank you for this question. I think this is very important to underscore at this given time. So I want to go back a few years, 2014, 2015, with the advent of President Sisi in Egypt. I think Egypt took a very advanced role in revitalizing and reinvesting and re-energizing all the infrastructure and utilities space. And that basically was the government's role, the state role, because the international investors and local investors at that point in time did not have enough confidence in the economy to go ahead and do these projects. So the state took on these projects and did fantastic. So, today we have great energy alternatives. We have very strong road network, ports network, and so on and so forth. But I think, as you mentioned, the time has come to do 2 things. One is for the public sector to brownfield or invite international investors to come in and acquire existing assets that have been developed, de-risked, and are already operational. So that's one, and I think that's pretty critical. And the second is to transform the business model from the government providing all the goods and services to letting the private sector come in and provide goods and services. When the private sector does that, you ensure 2 things. One is the business case has been clearly vetted. The private sector is very good at vetting business cases, whether it makes sense, what are the terms, what is the financing arrangements, and so on and so forth. The second is also as equally important, which is the operation and management. As you operate and manage these assets efficiently, you continue to add value and keep a store of value in these assets for a longer period of time. So the sovereign fund is participating in these two buckets. On existing assets, for example, we have been tasked by looking at some assets. One of them has been in the media lately and for the past few months, which is inviting the private sector to come into one of the large Siemens power projects that have been built and commissioned in 2018. These are large projects. This is a 4.8 gigawatt power plant, so this is not a small task, and hence, we get in touch with investors of that size who can be excited about running this business. So that's one. The second is trying to look at and envisage some of the national programs like the water desalination program. How can we bring the private sector to participate? What is the format? What is the contractual arrangement? And I think Stephen had mentioned something quite interesting, which is the first time you do a project, it is challenging. But then once you get all the regulatory framework in place, all the legal documentation in place, the financing in place, it is a template. It is a cookie cutter. And we've done that very successfully in Egypt. So if we go back a few years, we had our first solar project with a feed-in tariff 1. And this was not maybe the best takeoff for this type of project. But once we got it right and went into feed-in tariff 2, we were able to do Binban, which is 1.4 gigawatt, 1.5 gigawatt of solar, but distributed over 40 projects. These projects are all template-based cookie cutter. So can we do the same in water desalination? Can we do the same in green hydrogen? Can we do the same in various infrastructure projects? We believe we can. So it'll take a bit of time, but we will get there.
That would be fantastic. And I think the first project you mentioned is a project that is already completed. It's already running. So it just needs a financial acquirer, basically, in that sense. I'm supposing from the government's perspective, because it seems like a low-hanging fruit for the IPO program and the privatization program that have been just announced a few days ago in Cairo, I guess. Okay, moving back to Ranti. Ranti, we are calling for an increased role from the Multilateral Development Bank community and the DFI space. And even when we were in Cairo, we saw the center stage that they were taking from some of the discussions with the Minister of International Cooperation, etc. There are calls from Larry Fink, who was saying that they should take more first loss structures. There are calls that we should do more public-private partnerships on lending structures, etc. I just want you to explain to us what kind of schemes you have around climate resilience at Afrexim Bank at the moment, and what you've set up over the past couple of years since COVID.
Thank you. For us at Afrexim Bank, we do understand that each of our member states have their own peculiarities and cooperative advantages with regards to industrializing through green finance. Just as my fellow panelists have said, we've seen an uptick in, the requests for green financing across our member countries, and this has come on the back of quite a number of things, including, the opportunities to share knowledge amongst countries, best practices, success stories, no use reinventing the templates, but adopting what has worked elsewhere. We also realize that as a developing finance institution, we have a critical role to play in mobilizing financing by crowding in private sector investments. And we've been able to do this by developing certain programs in partnership with some of our international DFIs we have strong relationships with. We developed some lending programs, and these lending programs, through them, we were able to on-lend to climate finance or renewable energy projects across our member countries. Some of this, the people we've partnered include AFD, KFW, the EBRD, and these programs have not only provided financing, but also provided technical assistance and capacity building support to help, change and improve our member countries' ability to really, develop more climate resilient projects. Apart from this, we have also realized that we could use our financial interventions, things like, blended finance, B-loans, first loss equity, like you mentioned, and also our insurance and guarantee programs. And we've done this significantly. We recently expanded our Afro-Exim Bank Guarantee Program, AFGAP, and this has been used to de-risk certain climate investments. This has been used to insensitize and mobilize funding for institutional investors like pension funds, sovereign wealth funds in some of our member countries to increase the pipelines of deals that we have received. For instance, in the last 3 years, we've seen a huge increase in the pipelines of deals that have come our way for renewable energy, energy efficient projects or transition energy projects. Our pipeline has grown from a paltry 500 million when we started and put emphasis on this 3 years ago to over 3 billion in terms of assets right now that we are pushing through various credit approval processes. So we realize that there's a lot that we are willing to put in our tools of intervention that range from our insurance products, our guarantee products, realizing more public-private partnership, putting in blended finance, and even working with local commercial banks through our B-loan programs, or what we call our local administrative agents program, to ensure that we partner with some of these local institutions to mobilize private sector financing into the renewables and green energy space on the continent.
Thank you. Thank you very much, Ranti. That's very comprehensive. So I would like to turn to the third part of the panel now, actually. And so this is all obviously very good. We have been involved in a number of transactions involving Africa, etc. But right now, I think that is where the need is the most present, and those countries are all exiting some very difficult times as of now. And we will need trillions more to be channeled towards emerging markets. So I just want to get your thoughts. Maybe I'll start with Steve. One of the key issues in Africa is the low credit rating and fundamentals in some cases. And we've heard our colleagues speak about the oil importing countries and commodity importing countries where it's even worse. So what, in your opinion, can be done to overcome the low credit rating in Africa? What are some of the ideas so we can ramp up funding to this place?
Yeah, I think that what we have seen to date, and I think the concept really, Africa really represents almost a perfect situation for really growing blended finance further than where we've even gotten to right now, and more of bringing in institutions or organizations that can provide credit support. But also, I think, which is really important, it's probably even more important, is providing local knowledge and local information and local contacts, and being able to put together experts in a variety of different ways that can help an investor become more comfortable with investing in any particular country or any particular project. That, to me, is one of the things that has been most exciting about working with emerging market issuers, especially in Africa, has been we are very focused on disclosure and transparency, and the willingness from those issuers, whether it was Egypt on their green bond or any of the the Rhino bond, the blue bond, the forest bond, the ability to work with issuers who were more than willing to provide as much transparency and disclosure and disclose as much information as you were asking for as an investor was really encouraging. And I've said this before, and and people have questioned me about it, but it's actually been easier in a lot of instances to work with emerging market issuers on disclosure than some Fortune 500 companies based here in the US. So that to me gives a lot of encouragement and I believe opportunity to continue to do more. But I think at the moment, the blended finance is really critical simply because of the credit concerns that you mentioned, but also because of the need to identify experts and people with extreme local knowledge who you can bring into the conversation to help explain and help the investor understand kind of the risks they're looking at. Because when you're looking at a public-private partnership, you want to be able to, you feel comfortable that you have some support through the blended finance vehicle, whether it's a first loss position, a partial guarantee, whatever it might be. But you still have the credit risk that you have to be able to get comfortable with. And those multilateral development banks or those local institutions like Aranti's group, they have that local knowledge and they have that local access to the experts that we're going to need to talk with to get comfortable with investing. And I think that's probably a fairly reasonable comment to be made for all investors that are looking to invest in, the emerging markets where you're looking at maybe new structures or new concepts that are just now being developed and kind of vetted within the marketplace.
Thanks, Steve. Do you think, just to follow on question on that, actually, do you think that it will help also the privatization of the debt somehow and the fact that you'll have projects identified in the case of green bonds, for example, the projects are clearly identified. The returns on the project might be also identified, and we can see if it's bankable, investable, etc. Do you think that also this is something that could help ramp up your funding from institutions like yourself?
I do. And I think, as I mentioned earlier, we are a use of proceeds based impact investor. So we very much are looking for, technologies, projects, pools of assets that we can direct capital to help lower their cost of capital in the long run. And we know that's what our investors are looking for. So I think that the ability to identify specific projects and tie proceeds to that specific project is really critical to ramping up the investment and the opportunity set, because in a lot of ways that project specific focus allows for an investor to understand, especially in renewables, the metrics that you're looking for from an impact investor perspective are well known. Everybody knows what you're looking for. You're kind of looking for the amount of megawatt hours of power produced, the equivalent number of homes that may be powered by that, and the carbon emission offset. So that information is readily known and very accepted. So I think that when you can start with projects where the data and what you're looking for is just better accepted and understood, it makes for an easier transition into investing because everybody's kind of speaking the same language and on the same page about what they're looking for. And to us as well, one of the other things that we have found very exciting about working in emerging markets and specifically in Africa has been that we recognize the opportunity set from an impact perspective is even broader and wider. So when we talk about a solar power project or a renewables project, there also tends to be a community development or an affordable housing aspect. I think of the Kapeto wind farm in Kenya. That particular project that we invested in also include, obviously a large wind project, the second largest in Africa behind Lake Turkana. But it all empowered 250 million Kenyan homes and really helped them move towards their goal of 100% electrification. But combined with that were 83 homes that were built for the Maasai tribe in their homelands on their property, where they were able to work with the developers to find opportunity for beneficial engagement on these types of projects. And when you see all of that coming together, that's an indication you're going to be able to replicate this in other places, because it isn't just, hey, we're just building a renewables project. We're also looking at the community effect and the impact there, and that's really critical.
Thank you very much. And you mentioned carbon credits, so I think I'll turn back to Lina and discuss this point actually. So obviously, we all know Standard Chartered is a bit passionate about voluntary carbon credit. Our CEO has been on the task force set up by Mark Carney. And we are part of the Integrity Council on voluntary carbon markets, etc. So I think this is something that has the potential to unlock value for many of our African countries, corporates, and so on. Lina, can you tell me a little bit about that? Can you tell us?
Yeah. Excuse me. I think there's a tremendous opportunity for Africa within that space. It is the opportunity is there from Africa, from the perspective of Africa being a supplier of carbon credits, because of its landscape, because of where it is, and in order for us to kind of encourage or reduce the incentive to deforestation, there are a lot of elements that are happening in the market in order to kind of develop these. And one of the things that we are trying to do is talk to governments, talk to clients, understand what their thinking is around the carbon markets and developing those. How can we support in developing those markets and attracting that capital towards it in order for these markets to continue their growth trajectory with no deforestation, and actually with an incentive to improve forestation. So some of we're having a lot of conversations around that. We keep getting approached with questions around it, around how it gets developed, the certifications that surround it, and how can you monetize and provide financing against those carbon credits. The discussions are not just happening with governments, but also they are happening with a lot of setups that are actually going into these markets and putting in place, securing land and coming up with ideas to provide nature-based solutions. So in addition to regular businesses or a separate stream of income that a business is coming up with, carbon credits is becoming like a secondary source of income for them. And there are a lot of questions around, how can I monetize this? How can I contribute to it? And all of these technologies are popping up as well. So it's not just nature-based solutions, but also technological-based solutions that are also producing, certain questions around carbon credits and what have you. So lots of discussions, and I think the opportunity is huge there, and just taking time to kind of materialize, but I'm sure it will get there.
Great, thank you very much. And one of the things I learned relatively recently, and I'd like to share with the audience on carbon credits, is that in the UN-defined lowest developed countries, if you build a simple renewable power plant such as wind or solar, you can get carbon credit from that. You don't have to show that you're replacing a high emitting source of energy by a lower one. You don't have to show the additionality. Only in the lowest developed countries, you are able to actually recognize the carbon credit, which is something that for the lowest developed countries may be quite important and quite critical in helping with the energy build up, actually, because over there sometimes it's not a transition yet. It's just a build up of the energy that's needed. Perfect. Thank you very much. Super helpful. I'm going to just check if we have any questions from the audience. Apparently no questions. So in that case, I'll just wrap up. I think this has been a really fascinating session. I take a few takeaways from the session. First of all, there are very difficult market conditions as of now in Africa, but the need is absolutely there and critical. And I think for the entire world, we cannot just park it aside. We have to help Africa develop. We have to help Africa with its climate resilience and transition, etc. We will need to build projects that are investable and bankable. We will need to rely much more on the private sector for those projects, we are going to need to, remove the burden from the public sector, and that also will enable those projects to be a lot more efficient than maybe what we have seen in the past. And then carbon markets will help unlock some of the value for some of the African countries. For many of the African countries, we're working on projects that have the possibility of bringing billions of dollars to some of those countries in Africa. So it's not a small topic if we get it right. It's still a market that is very fragmented as of now, but I think it has potential value for the future. And finally, last but not least, the role of the multilaterals is going to be critical in all of this. In not only, as Steve explained to us very well, it's not only to mitigate the credit risk, but also to help us with the underground expertise in this in Africa, especially. It's a huge continent that is quite untapped from the investor's point of view. With this, I just want to thank my guests very much. This has been a fascinating session for me personally, and I hope for all of you. It's been great having you. Thank you so much for joining, some of you at very early hours. So special thanks for that. Our next topic is going to be the supply chains heading for new shores, why diversification and partnership will determine the way. Thank you very much, everyone. Stay with us for the next session and hope to see you soon. Thank you.
Thank you.
Bye.
Thank you very much.